Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq 100 and if inflation has turned a corner based on the latest consumer data. Ryan, it's great to see you as always. Welcome back to Trade Talks, and let's get a look into the latest weekly performance in the Nasdaq 100.
Sure, and it's great to be here, Jill. It was a good week for the Nasdaq 100 as tracking vehicles QQQM and QQQ were up 2.86% and 2.85% respectively. This outpaced the S&P 500 index's 1.19% total return and the S&P 500 value index's decline of 30 basis points. And so far pretty similar to the yearly figures, given that the year is only 3 weeks old, with QQQM and QQQ up 2.92%, S&P 500 up 1.53%, and S&P 500 value down 53 basis points. But as we look to the past week, Nasdaq 100's big move came on Friday after earnings from Taiwanese chipmaker Taiwan Semi. The company reported revenue and earnings that beat expectations, but really it was the rosy outlook for 2024 that fueled a surge in semiconductors names. The company said that it expects greater than 20% growth in revenue thanks to surging demand for chips that power AI functionality. And Nasdaq 100 advanced by nearly 2% thanks to the broad exposure to semiconductor names. And we have to note that Friday marked an all-time high for QQQ, QQQM, and the Nasdaq 100 that's being extended today with the slight uptick in stocks.
Let's talk about sector attribution. You touched on it a bit just before, but where are you seeing the performance coming from?
Yeah, and that's really it, right? Technology, the biggest driver of both absolute performance and relative outperformance against the S&P 500. We saw some contribution to relative outperformance from underweight exposure and outperformance from the healthcare and energy sectors. But I mean, the story this week was tech and really that semiconductor story. When we look of the top 13 long contributors to QQQ outperformance against the S&P, all 13 of them are semiconductor and semiconductor related names, with maybe one asterisk being Apple. And I say asterisk because obviously Apple manufactures its own chips, but there are so many other lines of business and products. But you go down the list, you have Broadcom, AMD, Applied Materials, Qualcomm, NVIDIA, Lam Research, KLA Corp, Texas Instruments, Marvell Tech, Cadence Design, ASML, Micron. All of these names, with the exception of Apple and Texas Instruments, were up over 8% up over 6% rather for the week. So certainly a semiconductor-driven rally on Friday and for the broader week. And then as we look towards next week, we do have Tesla reporting earnings after the bell on Wednesday, and that's followed by a ramp up in announcements from some of the heavyweights like Microsoft and Alphabet on the 30th, and Amazon, Apple, and Meta on the 1st.
And Ryan, to wrap up here, clearly the market has been focused on the macro, and I want to take a look at University of Michigan data, of course, the consumer survey there. Is it suggesting that perhaps inflation is turning a corner? How do consumers feel about this?
Yeah, I think that's sort of where it stands in this particular snapshot, right? And certainly, again, we got this announcement on Friday. Friday's performance was likely aided by this as well, which showed that consumers expect prices to increase at a slower rate than a month before. But broadly, we look kind of at the January preliminary reading. It rose 9.1 points from the prior month to 78.8. So that's the largest month-to-month jump since 2005 in the broad consumer sentiment report. It's the highest reading that we've seen since July 2021. And we also saw increases in current economic conditions, current consumer expectations, and then a benefit in terms of prices. So we saw mixed data on prices the week before between the September CPI and PPI reports. For the University of Michigan, the one-year expected change in prices fell by 20 basis points from December to 2.9% for next year. So that's the lowest reading that we've seen in that indicator since December of 2020. And then over the next 5 to 10 years, consumers expect prices to rise 2.8% annually, the lowest level that we've seen since September. So basically, with the read-through here, consumers are more positive on the economy. The drop in expected prices help the outlook for a more accommodative Fed policy, and then broadly, potentially some more risk-taking, which saw kind of a bump up in stocks. But we're going to get another look at price data this coming Friday with the release of the Fed's preferred inflation gauge, the PCE deflator for December, and I think that will be pretty telling in terms of where the Fed may be leaning for subsequent meetings.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.